Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Okay, so today's a big day. Not so much early in the day. In fact, volume may be a little bit lighter here early on, but later today we get the Fed minutes out at 2 p.m. Eastern time, so we'll get insights from the Federal Reserve on inflation and the economy. And then after hours, we have NVDA reporting earnings and Salesforce CRM reporting earnings. So those are two big companies. Needless to say, NVIDIA is the biggest one of all here at a basic $3 trillion valuation. So we're going to see how that plays out. That will impact tomorrow's trading activity for tech stocks, in particular, the semiconductors. Now, semiconductors have had a big bounce. We've seen the SMH rally sharply higher. NVIDIA's rallied sharply higher. Many other names out there have also shot back up substantially as the markets are not too far away from their all-time highs. So let's jump in here to the day intraday chart on the S&P. We can see basically this is where the market closed yesterday, right? So we closed here yesterday. This was after hours and overnight. You can see the markets were gently fading. Look at this gentle fade. I mean, almost very controlled fade throughout the overnight. And then right at 5:30 in the morning, right here, 5:30 a.m. Eastern time, the market put in its low and then got a bull move to the upside here and then down, up, down, right? So basically the entire overnight from yesterday's close, the entire move was in 1 10-minute, 2 10-minute, 3, 4, 5, 6, 7, 8, 9. In 90 minutes, the markets went from their lows to their highs and since then have gone sideways. All right. So just to kind of put it in perspective, how there was obviously something here, whether it was European markets opening, whether it was chatter about, tariffs, who knows what, but something caused a little bit of a move up. And now it's kind of in the markets and we're chopping sideways. Now, all in all, markets are basically flat on the day. If we look at where the markets closed yesterday, take a look at this. I'm going to put a trend line in. So that's where markets closed yesterday. And this is where we currently are. Notice how close we are to the flat line. Now, remember, I just mentioned how NVIDIA earnings are after the bell and also the Fed minutes are coming out in the afternoon today. So just be aware that this morning, it's very possible we see very light price action. All right. Now, looking at the daily chart, we know we have our all-time high level right up here. And we also know we have a zone of resistance, right? So we're still within that zone of resistance. That zone of resistance, for me at least, this is kind of the zone that I've talked to you guys about right in here. And again, we still are struggling around. We got into that zone here. We pulled back. We're kind of retesting it right in this range. And what I said to you guys yesterday is still very relevant today. The high right here, if we get any daily close above this trend line, this zone right here, and the high here from this one day, you should see a test of the all-time high on the S&P. Now, if it can't get through this level, the markets remain vulnerable for a move to the downside and a rejection and a bigger drop. All right. And again, if we drop, there'll be some support here, but really this is going to be your first big level. The big green candle. Remember this Wednesday? This was a Wednesday that we will all remember. The markets went up 10% in one single day. Again, very few times in history you will get that type of move, but that did happen and it was remarkable, absolutely tremendous. So that will now be, that high will now be technical support if the S&P pulls back into it. Now, normally I go over the NASDAQ, but today we're going to go over the Russell 2000. The Russell 2000 is a chart, is again 2,000 companies, generally small caps and regional banks. So again, it's kind of more the real economy. Now, you might say, well, why is the Russell considered to be the real economy? Well, the Russell, number one, is 2,000 stocks. So the S&P is only 500 stocks. The NASDAQ 100 is 100 stocks, right? The Russell is 2,000 stocks. So it's a much broader cross-section of the U.S. economy or the economy itself, but it also is more not weighted. It doesn't have Apple in it. It doesn't have NVIDIA in it. It doesn't have these behemoths that suck up all of the entire indexes that they're in and dominate. So it's much more, it gives credence to almost every company in the Russell. So it doesn't mean, like when you look at the NASDAQ 100, basically 50% of the NASDAQ 100 is the Magnificent Seven. That's what it's made up of. So essentially, if the Magnificent Seven do well, the NASDAQ 100 is going to do well. It's just that simple. With the Russell, it's much different. It's made up of so many companies with more equal weightings. So it's a better gauge of the overall economy or how all the stocks are doing. Now, what's interesting about this is that look at the performance relative to the S&P. So just taking a look. Now, listen, it's had a great rally off of the lows. It absolutely has. But if we look at where it closed yesterday up to the all-time high, it's still 18% away from its all-time high. Now, if we flip over to the S&P and we look at the S&P, how far is the S&P away from its all-time high? And the answer is just 3.8%. And so you see that? That's important for those of us that are more economists or want to think in more of a how is the real economy doing. What we can clearly see is when you dominate an index by, having NVIDIA, Microsoft, Meta, Google, Amazon, Tesla, the big mega players in it, then markets are close to their all-time highs. We're 3.8% away on the S&P. But when you do the overall market, a better gauge of the overall market, we are still far away from the all-time highs. And what does that tell us? It tells us just exactly what we know, is that in the U.S. economy, you have the players that are making a ton of money at the top. They're still spending. They're not feeling any recession. But if you're someone out there that's kind of middle income, middle to upper, middle to lower, you honestly probably are already feeling the stress based on housing prices, rent prices, insurance costs, food prices. All the inflation has been hammering you to the downside. And that's why it's important to look at the Russell. I would almost look at the Russell and say that's the normal, the common, the average man's index. It gives more of a broad-based cross-section of how the real economy is doing, not just the elitist economy at the top. All right. So let's take a look at a couple other charts here. The dollar today, just checking in. We're just inching back up a little bit. Remember the Fed minutes today. That'll be interesting to see about where the dollar goes. But for the most part, we talked about it yesterday. You have your big down move here. And again, that's more of what I would consider to be a flagpole, right? So here's your flagpole down. And then we're just chopping inside of that, which is a bear flag formation. So even if we continue up, as long as you don't break above this level here, this would just be up, down, up, down, up, down, and eventually you'd anticipate it to break to the downside. Yields today, after 3 consecutive down days, are getting a small bid. Nothing major here. Again, looking to see what we hear about tariffs, what we hear about the trade wars, what we hear from the Federal Reserve. And also, we're going to get some key PCE data, inflation data on Friday, which will affect the yields. But I still remained on my point, on my target zone of saying that, sure, this is a good pullback and we could pull back more, but this line is suspiciously waiting here. And at some point, it would not shock me to see yields push up to 4.74% and hit that line before a major pullback. NVIDIA today is a little bit higher ahead of earnings. Yesterday, it had a nice move. We had this bullish consolidation pattern right here. That appears to be breaking to the upside. Now, again, just because this pattern's breaking out, I'm not necessarily in the camp that it's a no-brainer that NVIDIA is going to go up on earnings. In fact, I am still very skeptical. Number one, because this bullish pattern is more because the S&P has been consolidating in this same pattern. And then yesterday, the S&P and the NASDAQ were up. NVIDIA was up, right? And today we're flat to positive. Markets are flat to positive, right? So it's more following the markets. So it could be a kind of a mixed bag. But having said that, I will be looking to trade NVIDIA earnings this afternoon. These are my 3 key levels of resistance. If it pops, if it drops significantly, this would be my after-hours buy zone right here at 115, all right? Going into earnings, I'm not going to look for a move. It's too hard to guess, like, is it going to be going up on earnings? Is it going to sell off on earnings? But once we get that move, I'll start analyzing these 3 levels. This one would be the high-risk one. I'm leaning more towards shorting here and adding here if it pops up. That's around 148.50 and then 153 as key resistance levels. All right. Now, we did get, oh, by the way, before we move on, let's look at CRM. CRM reports earnings today after the bell. This is another pretty big company. And again, if we look at this chart, you can see this one's faded and hasn't really put in that bullish pattern that the S&P. This has more been a rollover. So this is going to be an interesting one. Now, I will say that it is closer to recent lows. So again, expectations for CRM are probably a little bit lower. But overall, if I'm looking at levels to watch in the after hours, what I'm going to do here is just simply to bring a trend line right through these lows. So if we dump out here, this would be good support. There's also a gap fill right here. If we look at that, you can see this gap right from here up to here. This area right around 243 down to 237 will be major support on CRM. And then if it pops on earnings, this would be the obvious short level kind of right in here, right around 314. If it got up there, that would start to get me very interested on the short side. Now, we did get earnings yesterday after the bell from two companies. Number one, Okta. This is a cloud company. The stock is getting absolutely hammered here, trading at $108 and change. Look at this drop yesterday after hours. Look at that massive drop. Then it kind of rallied up this morning, but look at it come back in and make new lows here. So interesting chart there. Now, looking at technical support levels, I have a level that I will be watching intraday. Look at this one right here. I love this level. This is around the 104.65 to 75 level. High pivot and also gap fill right there. The other thing you could also do is you could also do a fib retrace on this, and I haven't done that yet, so let's just see. It's very close to the 618. Very, very close to the 618. So that does add credence to basically anything between 104.75 and 103.25 as being a major support level. So I'll be watching that in the live day trading room today for a potential trade. Box reported earnings. Take a look, big gap up on Box on the back of earnings. Notice the initial surge after hours. Then it kind of quieted down. It did get as high as 37 yesterday after hours. So I have to take that into account when I'm looking at a potential short level here. And if we zoom out on this chart and we go way far out, you can see like it's basically, if you go to 37, 37's up here. So it traded at all-time highs on the chart. So how do you figure out a level to short? Well, what you do is you look for upsloping trend lines. So for me, the first thing I would do is I would say, okay, well, we have this high pivot, we have this high pivot, and this high pivot. Those make the most sense. High pivot, touched it here, pierced it right there, tags it exactly right there. And this would bring us up to right around $37.80 to $38. So if this gets up to about 38, we'll say, then it starts to hit some major technical resistance on the chart. All right. And again, that'll be an interesting level for us to keep an eye on. This morning, ANF reported earnings. Take a look at this move, guys. Monster move on ANF. It got as high as around 102.50 in pre-market. It has pulled back and consolidated a little bit. But again, this is a retailer that reported earnings, a monster mover here. Now, notice there was a big gap fill here. It's already above it. The rule of thumb is if pre-market you're trading above a major technical resistance level, it is no longer a high probability level. Now, high probability level doesn't mean it won't work out. Maybe it does pull back here. But in other words, for a trader, the risk is too high. So what do? You go above that and you say, okay, the highest point in after hours was 102.65. So what above 102.65 would start to get me interested? And for me, see this low pivot right here, this major low before the bull run here, where it kind of went up, chop, 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 lowest point here. That to me would be my point of interest at around 109, maybe 108.50 to 109. All right. So again, ideally, we look at things like that. The other thing we can do as well is do a Fibonacci retrace, right? You could do it from this high down to this low. Does anything match up? Now, it doesn't have to match up. And in this case, it doesn't. But again, it just gives us a grounding point where, let's say it goes to 115, there'd be another level, and just above 115, there's a gap fill as well. But in this case, this fibs don't align with the level. So for me, I'll be focusing on that 108-ish level to short. All right. Next up, let's take a look at Bitcoin. Now, Bitcoin is continuing to kind of hold steady here just below major resistance. Now, let's talk about this because there's something forming on the Bitcoin chart that has me a little bit concerned that there's a chance it won't achieve my target up here, which is where I was going to really load the boat on a short. Now, listen, it still could. But what I have to monitor here is what we call an inside bar pattern, or essentially a bear flag. So what we see here on the charts is you have this big wide range red candle, which reversed this green entirely and then some. So think about that as being like an exclamation point, right? When you see something like that, where it reverses the previous candle and then some, think about it like a big exclamation point, something that's telling you to pay attention. Now, what's happened since then is equally as important. All of these candles, these daily candles, are all inside of that. No candle has even retested the highs. This, to me, would essentially be a very small but powerful inside bar pattern, right? Down move. So here's your down move, right? Down move, and then inside bar pattern. So here we have a move that could be a bearish pattern, and it could be signaling downside. Now, listen, could this fail? Of course, any pattern can fail. Remember, we deal in a world of probabilities, no certainties whatsoever, but it's easy to tell if it fails. Any daily close above the red candle, it's done. It has literally no impact technically anymore. But as long as we remain in this pattern, the odds are starting to favor a breakdown in Bitcoin. So keep that on your radar there. Gold. Gold is hovering flattish to positive. We know we pulled back off of this. Essentially, what I've said to you guys is this is an inside bar bullish pattern as long as we hold this 3,100-ish level here. As of now, we are. So my bias remains bullish on gold in the midterm. All right, near term, we can still pull back a little bit, but midterm, it is still bullish. Okay, next up, we have the silver chart, which continues to hover above. So far, no major move there. So again, just a wait and see, but I still would be positive as long as you hold this trend line and don't close back below it with confirmation. This remains bullish on silver. Palladium, take a look at palladium. Palladium's had this amazing pullback. Take a look. What do we call this, guys? Quiz. Here's a quiz for you guys. What is that called? High pivot, resistance, 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 closes above, confirms, continues, retraces. What's that called? Retrace to the scene of the crime, right? Is that a buy there? Absolutely. It was resistance, 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 breaks out and confirms, retrace. Technically speaking, odds favor heavily that this should rally off of this level. Now, again, remember, it's odds or probabilities, so it's not certainty. So if tomorrow we look at this and it breaks below, that's fine. It does what it does. But I would say about 8 times out of every 10, this should be a bounce play on palladium. Palladium should get some sort of bounce. Leslie, let's quickly look at oil. Oil upticking again, still nothing going on this chart. A whole lot of 2 weeks of basically tight range trading on oil. And then if we look at natural gas today, we can see nat gas continues to do much the same. Did have a bigger move here, but for the most part, the last week, it has been very, very quiet. All right, guys. So just a reminder, you got words from the Fed today at 2 o'clock. Let's keep an eye on that. That should be something that keeps the market quiet in the morning period. And then also even after that, you might get some volatility around 2 o'clock today from the Fed. But then really everyone's just waiting for NVIDIA earnings. And NVIDIA earnings are so important because it's going to give light to how the demand is. What are these demand restrictions being lifted impacting? What's the guidance? What's the margins? So remember, I have a feeling NVIDIA will blow away earnings and blow away revenue numbers, right? Estimates. But it's all about margins and guidance. That is the key, guys. Absolutely the key. All right. On that note, I got to get to my trading room. As always, guys, you guys are rock stars. Thank you so much for supporting me. And I hope you guys learn something new in each and every game plan, or at least reiterate some of the lessons that I've taught. Thank you again for supporting me and Verified Investing. Take care.